We can plant so fast, I'm not all that worried about it.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you, and today my guest is Justin McKinney of Comstock Investments. We are going to take a look at Tuesday's market action, and this, of course, is now after we know what the prospective planning acreage numbers are and what the quarterly stocks report numbers were, and the market had a chance to digest that a little bit, and well, heck, shazam, Justin, we had a higher grain trade here today on a Tuesday. Does that mean it's on up and out of here from now on, or what do you think? How do you read the tea leaves here?
Well, first and foremost, Marlin, we did have that announcement with the Renewable Fuels Association, Big Oil, and our Renewable Fuels Association getting together, looking at proposing a 5.5 to 5.7, 5.8 billion gallon biodiesel blend to the EPA. That story was out a little bit yesterday, caught a bunch of traction here this morning. We did see soy oil react very positively yesterday and today, up to 55 here in the front month today for the soybean oil. We've been waiting for that news for 2 years. We've heard all of this about the renewable diesel, and we're not going to have enough soybean oil. And exports have been phenomenal on soybean oil, but yet soybean oil wasn't able to catch any traction. And it feels like this is a story that could propel that up a little bit. To piggyback off that, we still have a lot to hammer out on that. Where the blending credit's going to land. Is it going to be with the blender? Is it going to be with the producer? How is the 45Z going to play into all this? A lot of unknowns. The whole world is full of unknowns right now. But that is what we do know on the biodiesel, and also that it looks like they're going to leave that ethanol number somewhat unchanged at that 15 billion gallon blend. So we do have some positive news in the soybean market. We did close above some resistance on that May chart and the soybean oil. So all things, we've traded negative news, Marlin. We've traded the tariffs. We've traded big crop in Brazil. We've traded China. All of these things, we've not been able to break this market lower. Now, do I expect wildly bullish things to come from this? I don't really know. I think it'll take some time for the EPA to hammer it out, but it could be the formation of something that does have substance, especially when you look at the acres number from yesterday.
Yeah, speaking of which, we kind of openly wondered yesterday after that report came out if maybe they hadn't thrown all the bearish news at it that they possibly could, including the kitchen sink. And at this point, it's like the bears are out of ammo, and it looks like the point of least resistance will be just going back up again. It's kind of like holding that balloon underwater,
Yeah, for sure. And, so many times in my 21 years, you see bear markets get killed by bear reports, right? Although yesterday, I didn't think that was a bear report for soybeans at all. You look at the math, sure, 83.5, wherever we come in at, you still look at that number and you can adjust the exports higher, 20, 30 million bushels, and say that we're not going to ship those beans. But ultimately, I talked about this morning in the report. We don't know what August is going to be. You could be a hot, dry August. We could get some biofuel news. You cut 1 to 2 bushels off of this crop coming up here, and you could get yourself down to 140, 160 million bushel carryout real quick. And then we have a different soybean market on our hands and a different price level to trade from.
I think one encouraging thing after the major USDA reports came out, it seemed for all the world like it was a very bearish report for the corn, and look at it. It's traded in positive territory basically ever since. So there again, it looked like everybody was all on the one side of the boat there. Are you pretty optimistic now about corn, even though everybody knows that we're going to be looking at a big acreage?
I think first and foremost, we needed to get that out of the way. Just get the number out there, and then let's go from there. It did come in 1 million and 1.3, whatever, million over what the trade was expecting, or the average trade guess. So was the trade guess too low? It's possible. But at the end of the day, was the trading something higher? It feels that way. We see one interesting note yesterday, Marlin. It didn't happen today, but we did see those bull spreads pull the front month higher than the back month, which ultimately is a sign of demand for corn. And well, I'm not wildly bullish. We still have a very, very tight stocks to use in South America. Brazil was in the market in the United States last week looking for corn. There are some things to hang our hat on corn spreads. Basis is tightening in some areas. So big picture is it feels like the corn wants to be bullish. We need to get past tomorrow's tariffs before we can really kind of level out where we're going to be at. And maybe we hammer something out with Mexico. They've been such a fantastic buyer of our corn this year. But ultimately, we need to come to the table with Canada and get something done so that we see that ethanol. We export such a huge percentage of ethanol up to Canada that we need to keep that market open.
So here on Tuesday, a little bit of a sign of life in the wheat trade once again. So, golly, that's 2 days in a row to the upside. I mean, it's a small victory, but man, they're kind of hard to come by these days here on the wheat.
Another one in a row, you can call it a streak, right? No, yeah. Excuse me. You look at that wheat crop. The acres obviously were the lowest, I believe, without fact checking it back to 1920 or 1919. Is it significant less acres? We're going to see you talked to Daryl Peel. I also understand the economics behind grazing out that wheat. As a cattle farmer myself, if I had yearlings out there, you put 100 pounds on those calves, you're picking up, well, I saw some 8-weights trade for $3 today. So, you pick up 100 pounds, there's $300. There's no way you're going to combine that wheat and make $300 an acre on it. So to me, I think the wheat market has a story. It's probably a little early to talk yields just yet, but ultimately we had Russia lowering their production estimates, one of their firms over there. We have a storyline developing here with less acres, possibly poorer conditions, and a market that's been really beat up for a long time.
Well, I know here in the Mid-South, I think, of course, they grow soft wheat where I am, north of Nashville. Gosh, the wheat's about 10 inches tall already. It's really starting to elongate upward here. Now, out here, it looks pretty good, but we're probably still a little bit on the calendar away from knowing if that winter freeze event out there in Kansas and Oklahoma really torched some of that wheat or not out there.
Yeah, I would think, and we're going to get some rainfall. Again, maps forecast for rain. We had a higher wheat market today. It tells me that maybe that storyline has been beat up long enough, right? But we won't know on that wheat market for probably a couple weeks when it comes out of dormancy. It's wheat's such a fickle crop. You can't kill it when you want to, and you can't grow it when you want to. So hard telling. We'll see when in 2 weeks, 2 or 3 weeks.
Let's talk about this livestock trade. Once again, the cattle market comes out to be a hero after it sold off for a couple of days here on live cattle. Here they go again. Now it looks like maybe they're wanting to retest the highs yet again. You cannot outguess this cattle market.
You can't. Today we saw boxes up over $7 on the midday at 242 and change. Huge gains in the boxes. So now, was that quarter buying? We ended the quarter yesterday. Was there restocking due to quarter buying today, refilling some orders that needed to happen? Was there buying on the Board of Trade due to being a new quarter? All of those things. The interesting thing in the cattle market for me today was the deferreds led the way. You saw those back month cattle up to 230, 260 in the August and the October, all the way out into the February of 26 was higher, sharply higher today. So something, do we believe that we're going to get something done or the economy is going to roll ahead? I don't know. I surely don't want to be long, 208 cattle in the front month. There's a ton of open interest that needs to be dealt with before delivery, which obviously takes till the end of the month to complete that process. But just in general, there was a lot of life in those cattle, and the feeders were just skyrocketing higher today too. As we mentioned earlier, there was a couple cash sales. I saw that 800 pounders traded $3 at the sale barn. Some pretty good size runs coming this week too locally for feeder cattle as those grass cattle try to get purchased for spring.
It's interesting that you brought that up. There always was that old saying, you never lead a bull, or a bull never leads by the rear end. on the back months. And that's interesting you bring that up here. Looks like that's the case, whether you're talking about live cattle or feeder cattle in this case, right?
Looking at this from a strictly investment point of view, I struggle with wanting to be long, and maybe I'm just too bearish, but you got September feeders at 291.45. That was up 305 today. I struggle putting a buy order in at 291.45, right? You sure feel like the probability that's you're knocking on record highs. You're not that far away from $3 cattle or feeder cattle. It seems tough to want to get long that market out there. So when you look at the fund money that did increase last week, continuing to come into this market, it does make one optimistic, but I am very cautious. Those funds can turn on a dime if for any given reason, or if this economy sets back. So far, beef demand has been exceptionally resilient, as we have seen in the boxes.
Is there potential, do you think, for the cattle market to get caught up in this tariff tug of war going on? It'll be later this week before we get real answers, I guess.
Well, you can paint the case that potentially tariffs are bullish for cattle. You have less imports from Mexico, which you guys talked about earlier with Daryl Peel. You have restrictions coming from Canada. So you look at the export side of the selling beef. Yeah, it's possible that we could paint that as a bullish situation. Overall, I would agree that you could paint that as a bullish situation due to the amount of, cattle from Australia and Brazil and places like that come in that could possibly have a pretty steep tariff on them. However, I still am cautious overall the tariff picture and how that does affect the average consumer's bottom line.
Let's talk for a second about this hog market here. And I see where the nearby contract on the hogs didn't have the greatest day, but the deferreds all did. They all had triple-digit gains. Is everybody already ignoring this April contract now?
It's getting pretty short. That expires the 14th, so we're getting relatively short. You're still a couple dollars off the index yet. So I believe the index was 88 and change last night. So $1.50 to close that gap on that, as those contracts are cash settled. So we do need to close that gap, but you look at the June and beyond, and again, back to the cattle point earlier, we did have a bullish feeder pig, hogs and pigs report. Had the tariffs not overshadowed that, I do feel like we would have been sharply higher after that report. And the numbers justify that market moving higher. But when such a huge percentage of your pork is exported, especially exported to Mexico, I think we need to digest whatever happens tomorrow, and then possibly we could be setting ourselves up for maybe a little bit better hog market, because those numbers have been they were revised lower, and they could be revised even another revision in the next report, because we are still hearing of some pretty high death losses in barns.
Well, when it comes to the entire livestock complex, how concerned are you about the action that we've seen here in these equity markets here lately? One has to wonder about disposable income on the part of the consumer.
You do, but cattle, I've always forever followed the equity markets, and now you look at the whole picture, and if cattle are down, all the stock market's down. Cattle are up, all the stock market's down. Cattle seem pretty resilient. Overall, I am fearful of exactly what you said, how many dollars are in the consumer's pocket to spend, and not only spend short term, but in 6 months or a year. I think these tariffs are going to, probably take a significant portion of time to work their way through the food chain, so to speak. And I'm not a supporter of tariffs. I do not want to see us lose any customers, especially customers where, checkoff dollars such as the soybean checkoff or the corn checkoff have been spent to develop those markets. So I don't want to seem that I'm in favor of those tariffs. But the cards that we are here to play, whether I like them or not, are the ones we're going to have to play for the next 3.5 years.
Well, alrighty. I appreciate all the information talking about how we traded today here as we open up the month of April. April Fools, you know what they say. But it looks like it was a pretty solid close on the grains. Now, what's the first major thing you're going to look forward to once we get past the supposed, what do you call it, Liberation Day tomorrow when they're supposed to announce all the tariffs? Beyond that, just ignore that for the time being. What are you going to be looking at? Just watching the weather forecast?
I think weather is going to be a pretty good driver in the next couple of weeks. You know, we can look at the drought monitor index, and we have, and the subsoil index. There's a significant portion of the corn belt that needs some water. However, it looks like in the east, they're going to get plenty of rain in the next week or two. So how does the planting progress shake out? Will we get those 95, possibly more acres planted? You know, we can plant so fast. I'm not all that worried about it, but you see a hiccup somewhere along the way, and it's enough to at least get the fund traders concerned. And seasonality, if we don't build a larger long position, they were about 100,000 long at the last commitment of traders report. If we don't have a storyline to continue adding to those longs or staying with them, we could have ourselves a tough row to hoe after the 4th of July.
All right, Justin. Thanks for the conversation. Justin McKinney with us. He is a broker, of course, with Comstock Investments. That'll do it for this particular episode. And again, we thank you for tuning in. Appreciate that very much. For producer Breanne Jenkins, I'm Marlin Bohling. We'll catch you next time here on the Comstock channel. All right. Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.